Anurag, what jumped out at you? Not quite sure if we have Anurag. Go ahead, Anurag.
Yeah, almost all the metrics were above where Street was looking at, except the other personal computing, which is the PC division. I think the relief for a lot of people would be Azure growth of 38% in constant currency. But frankly speaking, these results, although they are slightly better than consensus, I think the guidance is the most important thing and will drive the stock tomorrow morning. And then that's only we're going to find out on the conference call.
So we're waiting for some of those numbers in terms of outlook here. Having said that, Anurag, we know Microsoft was not one of the names that really participated in the January rally so far when it comes to tech names. Is this kind of maybe a playing a little bit of a catch up in the after hours because it's up about 4% here because the tone was kind of negative heading into it?
I think most of the analysts were expecting these results to be worse than what the company had guided. And I would say other than that PC division, everything else performed better. So we really have to see how cloud performs because frankly speaking, PCs are a cyclical business, but the real story for Microsoft in the long run is the cloud business, profitability of the cloud and the growth rate of the cloud. And if it starts to improve, I think that would be a U-turn for the company.
How much weight, Anurag, should investors put into the commentary that we're seeing from Satya Nadella about AI? Again, it's the beginning of the press release. It's the first comment that he makes, saying that he's committed to helping customers use our platforms and tools to do more with less today and innovate for the future in this new era of AI. He calls it out twice, and this, of course, is the context of a huge investment in ChatGPT.
So for Microsoft as basically a three-legged company with Office, with PCs or Windows, and then the third one is cloud. All the stuff he talks about, emerging technologies, takes the company back to the cloud because at the end of the day, it's cloud consumption that goes up if people use more AI tools or because the processing power needed for that is very strong. So every time he would talk about either its productivity tools or AI, it drives back growth to their cloud products.
And Anurag, from what we are seeing just now, I know you've had not too long to digest these numbers, but when we think about the cloud and the growth that we're seeing in the cloud, and again, second quarter revenues were just about on estimates, where does this put Microsoft in the competitive landscape when you think about some of those big competitors such as Amazon?
So when you think about it, on the cloud infrastructure side, Microsoft is a lot more exposed to legacy or older companies like the big banks and the retailers or the healthcare companies compared to Amazon, which is a little more, you could say biased towards startups. Now, having said that, Amazon has a big lead over Microsoft and everybody else when it comes to the infrastructure part of it. But because of Microsoft's hybrid products, it has been growing faster than Amazon for a very long period of time. Now, that's sensible because it's a smaller base. But frankly speaking, Microsoft is going to close that gap over the next several years because of that big footprint that I've talked about.
Talk about some of their costs, Anurag. Of course, we heard about the cost cutting earlier last week here. They're mentioning in the press release $800 million in non-GAAP expenses related to the latest round of severance packages.
So one of the things we'll hear from on the guidance that we are looking for is what kind of operating margin do they guide for the full year? And, in the last quarter, they said they'll be flat on a constant currency basis. We really want to see where that guidance is at this point. But frankly speaking, again, this company is not going to cut people only to, save a little bit of money. I think it is just an indication that the growth has slowed down quite a bit on overall tech spending.
All right.
I'm very confident that...
No, go ahead.
Go ahead.
No, please finish.
I'm confident that if next year growth returns or if we see tech spending rebound, hiring is going to come back along with it.
Hey, Anurag, I'm looking at, Microsoft shares now up about 4.8% in the after hours, following their earnings. You've got Amazon up about 2.7%. Does it make sense that we're seeing the pop in some of these names, and Microsoft in particular, as a result of these updates?
Yeah, as I said, going into the quarter, people were not sure that Microsoft will match that 37% Azure growth numbers that they said they will do in a constant currency. They beat that by about 1 percentage point. So all the stock reaction that you're seeing both on Microsoft and Amazon is because that they beat that for one particular number. Now, if the guidance comes out strong again for cloud for next quarter, it's going to maintain. Otherwise, it goes down.
But I'm curious, Anurag, what about the reaction that we're seeing in some of the secondary software names? I'm talking kind of like the smaller names, your Datadogs, Monday.com, MongoDB, Cloudflare, all moving higher here. Is that really the same story?
Think about it this way. If total software market is somewhere in the $600, $700 billion range, Microsoft is almost, you could say more than, quarter of a market. So it really is the behemoth that drives all software companies. There is not one category that this company doesn't do, when it comes to productivity. So almost it will drive, stocks for every infrastructure stock, as you mentioned, and every, application stock.
Anurag, given who Microsoft's clients are, I mean, we're talking Fortune 500 companies here, how can we read between the lines of this report for an understanding of how Microsoft is seeing the economy and how companies are seeing spending?
The way I look at it is that we all knew growth was going to slow down because of the guidance they gave last time. But it seems that the growth rate or the deceleration of growth rate is not worsening. It's kind of flattening out. And that's the first sign I want to see before I can, assume a U-turn or the path back to, decent double-digit growth rate. So if they can match this again with their guidance, that's again the most important thing right now. If they can say they're going to have not that bad of a deceleration, that really could mark the bottom of, technology spending for us.